All right. I am going to go over the trades I took last week, which was the third week of May. So the first trade I took was Monday right here. So I think the risk to reward ended up being about 1.2 to 1, something like that. So that was over, I believe, where's this brush? This isn't wanting to work. I think the trade was over here. So this is the higher time frame, the hour. This is the lower time frame, 15-minute. So what I saw at the time, which was, looks like around 9 p.m., we had crossed 14 and 50, and we crossed the 200, 14, and 50. And looked like we were starting to go in an uptrend here after we had kind of been going in a downtrend, rejected off some support, and then crossed on the higher time frame as well. I saw that we had retraced on the higher time frame, and we were starting to leave these bottom wicks down here and started to have some bullish closes with those wicks, still respecting the EMAs after they had crossed. So kind of thought that we would fill that wick range and then continue up. So it looked like here on the lower time frame, we were still respecting the EMA, the 50 EMA, but they were starting to get a little horizontal, starting to have some consolidation here, and then we started to have some upward movement. So I think after this little cluster of price right here, when we shot up, is when I took my entry around just after 9, probably like 8:50 or 9, and we went up for a bit. Let me see how much. So like 7 pips, and my goal is 12. So we went up for that, and then we ended up having a pretty hard retracement down to the 200 EMA on the lower time frame and the 50 EMA on the higher time frame. Probably should have paid more attention to this, to how the higher time frame closed. Let's see, what time was that? Around 10. So what I've noticed this week too is the trades that I've held that have been over a longer period of time, they tend to have some pretty bad retracement closer to market close. Yeah, so around that 11 a.m. too is when we had that pullback, which is pretty typical. And that's where I got stopped out at. So I obviously had the right direction for the week. If I would have won this trade, I probably would have kept one running, and that would have been a really, really nice, actually, because I could still hold it from where I'm at now. So probably yeah, over 100 pips. So I was right for the direction of the week on there, and we'll go into the trade from the next day. So yeah, you can see that we had that bullish run all the way the next day, and then I think that takes us to this consolidation right here that we had. So my trade here was probably around 10:30 maybe. Okay. And I think what I saw here, yeah, it was after all this in this area. Yeah, 10. So it was after this really huge rally. So we pretty much went with no stop. And then I saw these candles were starting to go bearish, and so I was basically going for that hourly EMA magnet, which generally when I think about EMA magnets, I'm really going for a more on the 5-minute or the 15-minute. The higher time frames don't seem to be as reliable for those. They always take a lot longer. So I also saw these wicks here on the lower time frame. That was really ugly. All right, you get the point. So I saw those wicks. Looked like we had hit a zone and we're going to retrace down. So I made my entries. And then I was in profit for a little bit, not very much. You can see that my TP was probably about where the 50 EMA was, looking left, where that little FTR zone was. And then I saw that we started to reject off the 14 EMA and had some bullish closes. So I went ahead and closed early for the loss on that one. That one was a counter trend EMA magnet, so riskier trade than what I normally take, but we had just raised so much I didn't see it on a Tuesday continue to rally. I thought we would come down and grab a little bit more liquidity than what we did. All right, so moving on to Wednesday. So let's see. 16. So we're still on this consolidation. Looks like, yep, still on that consolidation. So to me, what this looked like is I basically viewed this as two consolidation boxes on top of one another. And I thought that we had broken out of it because it looked like we had came up, retested, and then continued up. So that's where I made entries on both my safe account and my risky account. So my risky account, I had, I think, 2 or 3 positions hit TP for 12 pips, and then 2 of them got stopped out. On my safe account, all my positions got stopped out because we had broken out of this consolidation. It looked like we had rejected support in an uptrend. So I was going to hold those, and then we ended up coming down, and I got stopped out. I thought about taking entries here at the support near the 200 EMA, but it was around that time was near market close, like 11:30, and so I just decided to stay out of the market because I was pretty frustrated with that trade, just because it was pretty bad fake out. But yeah, I still thought that we had that range to go, because you can even see here where that breakout happened. It looked like we hit this 50 EMA and we're closing above 14, so I thought we were good, and then we ended up having that retracement, going back up to the resistance, coming back down. So we had stayed consolidating there until I think 1 it looks like 1 a.m. All right, so we finally break out, and then this would be Thursday. Looks like my trade happens around, once again, like right after 9. Let's see here. Yep. At 9 there. So look like, if I can scroll in a little bit more on this. Yeah, so you can see that that we had that pullback a little bit. We were still trailing these EMAs, and then it looked like our downward momentum had stopped. We had that doji and started to have those bullish closes, so I took my entry there, and once again barely missed my TP, and then we started retracing pretty hard again down to the 50 EMA, and then almost as soon as I got stopped out, we started going back in the bullish direction, which was, I think, around, yeah, this was around almost perfectly noon. So once again, I was holding my trade from 9 to almost noon, and with the trades like this, I've noticed I haven't been winning them. So after we rejected here, I was pretty frustrated from the week because I was taking so many losses, and then I took my entry here. I took 2 entries. I normally always take 5, so just as a little experiment outside of my regular time, since it is my risky account, I went ahead and took those entries, and then we went up, kind of rejected off this 14 EMA, which had me a little worried, but since we were in an uptrend, I just went ahead and continued to hold. I figured it might sit there and consolidate for a little bit since it was new, not really a time with high volatility, and then it did end up hitting my TP and rising for a way. So I had the direction right, but once again, just sustained a little bit hard pullback. So it looks like we went up about 40 pips overall from that position. So good direction there. And then this would be Friday. Yeah, so right around here is Friday. Since it's Friday, market close, a lot of people getting out of their positions over the weekend, have a little bit of retracement so that we can get that liquidity for the next week is what my thinking here was. We were coming down to test what looked to be pretty strong support looking left. So right here was a tap and a tap here. So pretty good support and an uptrend, but I decided not to buy because it was pretty well below the 14 EMA, and just because I know on Fridays we can have that retracement, I just had this gut feeling that we were going to go down, so I waited for either a rejection off of support or a break of it. We had the break off of support. I looked left over here and saw that we were closing below that consolidation cluster, and we had some momentum finally, and we were crossing on this lower time frame. We had a lot of these wicks up here just failing to move forward, having structure that looked like we were going to continue downwards. So I put in sells and then closed just a little bit early for around 8 pips before we were hitting this 200 EMA and what would have been this 50 EMA here. It looks like if I would have held, we would have had a little bit of retracement, still respected the EMA, and then went a little bit below, but I think I did a good job with exiting a little early here just based off of the time. It was a pretty quick trade, and I saw that we had wicked and touched this 200 EMA just a little bit, and I didn't want us to completely reject off of support. And since this was a counter trend trade and the Friday, I wasn't too concerned with taking profit just a little bit early. Normally I try not to do that, but that was my mentality for that day. So we basically broke the support, went to the next zone. Pretty simple trade. And then that next week, just like I thought, we had rejected off support and continued that bullish momentum. I can go ahead and go over the trade I had today on Monday as well. So we were up here, starting to reject and close below this 14 EMA. Clearly closed below this support right here. So we closed below that, had through some wicks up here, weren't able to close bullish at the time, and we're crossing downwards on the lower time frame. So I put in the sells, and then we ended up having a couple bullish closes up here, which had me a little worried, came really close to my stop loss. And then we had around, so I took my entry around 9:15 this time and cashed out around 10:30 because we finally had this retracement down here. And since with this candle, since we didn't close farther than these wicks over here, as soon as I was up like 4 or 5 pips, I went ahead and closed out my one position, everything on my MT5 terminal shut off for some reason. I had to download MT5 this morning, and so it was a rush to try and get that ready. I only had one small position with this one, and then exited early on it just because it seemed to be counter trend to me.